Hello, Warriors. How's everyone doing? Shahab and Hugo and all you other reaction junkies. You doing okay? Newsflash, NASDAQ at new highs. Okay. So USD CAD, hi Scott, is morphing into a ascending triangle, which is a reversal formation. Going home on Saturday, I thought we'd get one more test down here, little ABC. Maybe it still happens, not down around just shade right around the 122 level or so. It's a pretty big break from here, or we break out. Anyway, a breakout is going to take us up to about 128. It's about a 400 point formation. And again, as I pointed out yesterday, the commodity currencies are the strength, being led by Kiwi. So I still think Kiwi is going to be a good short, but up here. And Aussie, I still think will be a good short, but possibly up here, 76.20 above this high. The bears will say this is a rally to sell for one more low for a third drive. That could happen too. Also, we're getting a little bounce in the yen. I think that this rally has to be sold, maybe up around 1120-ish. Uh, maybe we'll get a right shoulder here with symmetry to the left, which comes in up there around 1110. It's be about 61.8 back up here. That would take it down to 109.20. Looking for 108 before it's done. Cable's still stronger. Okay. Pointed that out yesterday where it was not close to the low, and EG still makes euro the preferred short. Okay, I think we're headed for a test of the lows. We could get pretty close to them, maybe take them out. I'm looking at this blue line around 84.85, which isn't too far from this low at 72, excuse me. Energy trying to trying to recover. I want to just show this Swiss in case it develops later after phase. I think we have a nice classic little 3 drive developing here. It'll take a new high for that to occur, but it's pretty classic where you had confirmed highs here, pull back, new highs here, barely got above 70. And if we get one more push up here, um, we could have a third drive and the second one under 70. Okay, so to be our second non-confirmation up there. It's pretty similar to what we have going on in euro. Euro looks like a 1, a 2, and then we haven't quite made the 3. And uh, euro's trying to rally. In fact, euro's much closer to the lows. You see, it's weaker than the Swiss, as the Swiss is further away from last week's highs. So I'm seeing a little bit more relative weakness in US dollar Swiss compared to looking for longs in euro. Everyone with me? And here we are in the dollar index. We did not make new highs. Maybe we're going to roll over here. Gold is still alive, even though they tried to take it down. I don't think that gold finishes until we complete the sell-off in the end. It should be supportive, and we're headed towards my target in 10-year yields. So this is, I think, this 120 level could be it. I know some people are talking 110. That's possible too, but I'm looking at a shade over 120 for this to begin to terminate at this 120 level. And silver was the weak sister yesterday compared to gold. Look at gold. All right, there's a daily, and here's silver, the daily. I like shorts in the silver up around the 27 level. So as I said earlier, S&Ps are pushing to new highs here. Hi, Sinatra, how are you? Uh, Well, we're not quite there, but it doesn't look like we'll confirm on the 4 hour. It doesn't look like we'll confirm on the 2. So, I know that there was some, fib extensions at the 4370 level. Maybe we're there this week, and the Nasdaq's still the outperformer. But you may look at this and go, "Wow, these markets are so bullish, they're so bullish." Here, I talked about this last week, and I just wanna show you one more time. Here's the Russell starting to roll over again. It still could not make a new high last week, couldn't even take out this high, let alone the March high. It's on the verge of rolling over here. It's 2,000 stocks, the Russell 2000. They're mainly domestic US stocks. So maybe that's a commentary on what's happening here. Um, yeah, under 220. Yeah. So the bears will be in control under this low, is what NG is saying here. I think so. I think there's a big break coming. When a market can't make a new high for 4 or 5 months while the rest of the board is making successive new high after new high, there's got to be a market message in it. I know some people are still looking for a new high. I just look at this and the weekly, and you talk about a breakout. Uh, so this was a breakout, gave you a few chances to buy it. Hey, Mr. Market was so nice that he would have even let you buy it underneath the breakout. You could have bought this underneath the breakout. Isn't that nice? You miss a breakout a few times, we'll let you buy it underneath it. Okay, and then it was back above the triangle. Oh, you still missed it. Here's another chance. You could buy it right here, and now here we are. So I'm just being facetious. And the VIX is pulling back a little bit, but I still think it's under accumulation. We're making new highs, and we're not at 14. And all these little wicks that we've been seeing for the past several weeks. A lot of ghost trades where it opens up down there. You don't even see it trade, and then it's back near the high and putting in nice candles. You could probably count around 10 here in the past few weeks, or at least since June. So I think that the VIX is going to break out. This looks like a pretty important line, this 18 and this 19. So I'd buy weakness in VIX. One thing that needs to complete to have the beginning of a correction in Apple. What do you guys see there? What do you see? What's about to happen? And this took a long time to get back to new highs. Yeah, yeah. Okay. And it should diverge up here. There'll be confirmed highs on shorter term time frames. Look at that. But anyway, I'm interested in the form that we're getting there. Also, one of the darlings never broke out to the upside. And there you go. And it starts with a T and it rhymes with me, Tesla. Okay, so I drew this descending line, before we had this, and it still couldn't penetrate it. This was yesterday. It's a big descending triangle. This would be one of my short candidates. This is what's carrying NASDAQ up to new highs, but as you could tell on the weekly, we're not confirming. On the daily, we are. 4 hour, we are. Yeah. So Amazon looking good. Microsoft trying to stall a little bit. Okay. If we make new highs here, it won't confirm. But if you look at the form on this, it also could be a 3, a little stretched out here, confirming on the daily, but that's what happens in blow-offs. I think that's about all the NASDAQ. Oh, Google finally made a new high the other day. But look how Google is not confirming. I mean, it's a shade over 80, but it's making new highs and has not taken out this reading all the way back here. Shorter term, it probably is. Yep, there, there, there. Okay. So, here's something else to keep an eye on. People believe that junk bonds will lead the way, and it looks like the high yielders are having some trouble here. This was the 15 minute. Here's your daily. Starting to run out a little juice here. It's diverging pretty good. So keep an eye on junk and the HYG because this should lead the way. You're welcome. And I got this. I started watching this again because of Scott, AKA Shooter. So, and he started watching it because of Michelle Schneider. And I'm interested in what my team has to say coming into today. So I'm going to hand it off to Stelios.
Good morning.
My trading warrior brother.
Hello, Coach.
How
how's
are you,
everybody
buddy?
doing? I'm
How you
good. I'm
doing,
very
bro?
good.
All
You
right,
take the screen.
Yeah, take it. I don't want it anymore. Could have it, buddy. Okay,
So
so yields. Go ahead.
You talked about high yields. What we're starting to see is a little bit of a tug of war now between inflation and yields because one cannot go up substantially without the other following. So we have inflation pretty much everywhere. Maybe the Eurozone is the only one which is at or near target. Inflation is rising and we're seeing yields falling. What does that tell us? This is really odd, but at some point when you get inflation, not only reported inflation, but real inflation rising quite a lot, then things like treasuries and bonds, nobody's going to want to buy those, right? I mean, obviously you have institutional buyers who have to buy them, but who have to have a percentage of their holdings in treasuries and bonds and all that. But it makes no sense. So at some point, you're going to get the Fed from being the biggest buyer of treasuries to the only buyer of treasuries, or sort of. You know what I mean? It's not exactly that. But so, we're seeing this, what is it, 30-year channel. It's incredible. I haven't seen a channel this big in anything, and it just keeps going. I personally think that inflation is not transitory. I think it's going to be elevated for a while. It's not going to be 5%, but I think it's going to be in the US, but I think it's going to be quite a bit higher than 2%. So at some point, yields are going to have to rise. At some point, the Fed's going to have to do some kind of tightening. We're going to get the minutes, the FOMC minutes later today. And like we said yesterday, I don't see any way that the Fed can surprise us to the dovish side. Obviously, I could be wrong, but I just don't see it. It's possible that they might give us more information about what Jay Powell referred to as thinking about starting to talk about tapering. And that might give the market a bit more direction. But at the end of the day, I think yields are too low compared to, well, I don't want to say fair pricing, but compared to what they should be. And with inflation this high, they have to start going. Now, how far lower do they go before they rise? Well, look, we're in a nice little support zone here in 10-year US, which if somebody wants to get a long yield, so short treasuries, probably not a bad place to start. The bonds are not. The bonds are a little bit different. I think, remember, I had been short the bonds and I was lucky enough I was short from about 175 or something like that. And I closed not at the lows, but near the lows. I got quite lucky with that. I think we might have another push higher, but then I think we're definitely going to be testing those lows again. It's a difficult situation. The Fed, they want to tighten, but they don't want to disturb markets. They don't want to disrupt them. They don't want to bring a crash, or not a crash, but even a down move, 10, 15, 20, 25%. I don't think they want that. So they're going to try and do whatever they can to avoid that. But at the end of the day, I don't think they can avoid yields rising. And if yields rise, then I think we can all agree that equities are going to be going lower. Now, how much lower? It's a good question, but we have to remember that the Fed can very easily find excuses to say, "Oh, you know what? We're thinking about tapering, but for XYZ reason, this is not going to happen." And then we're going to see the dollar index testing lows again. But before that, I think we might get a little bit more of a push higher in the dollar index, probably around 94, which is a nice confluence here, the 38.2 and the 200 daily moving average, weekly moving average. And the thing to remember, though, is that now the dollar sentiment and position, I haven't seen the COT, but I'm guessing it's the same. DSI is now close to 50 on the dollar. So it used to be very bearish. He was in the teens. Now it's not anymore. So it's kind of working off these bearish sentiment situation. I still think we might get a push towards 94, but my medium-term view is still the same. I think the dollar is going to be going lower. It's going to test these lows and it's going to break them. Will it be in a month, in 6 months, in a year? I don't know, but I think it's going to get there. This is what I think about the dollar. Now, some currencies like commodity currencies, they are all behaving in quite a similar way. So the Aussie, almost, I had drawn this resistance zone here for a while this is a weekly chart, and almost got there and rejected it. The Kiwi, same, it got there, rejected it. The CAD, actually what the CAD do, there you go, same thing. So commodity currencies are moving in tandem, and these are the ones that are going to move most as the dollar strengthens or weakens. So I think it's, Blake has been saying for some days now, he had a couple of really nice pips as well, patterns in play on here in Forex Analytics, and he had been a counter trend long dollars, and it's worked really well. And I think we might have a little bit more to go. But as I said before, I think this dollar bounce eventually should be sold. I am waiting. I'm not. I haven't done anything yet. My positions are still long silver and gold, which everybody knows, and miners as well. And metals have underperformed a little bit, but they're not, given the move of the dollar, they're not, they're not showing any technical damage, let's put it this way. I think Steve would agree. Silver is still within this wedgie thing, and it's been trading quite nicely in it. Obviously, if the dollar goes towards 94 in the DXY, we might threaten breaking this. That could do some damage. We could get lower. I'm still waiting to buy more silver at 23 or 24, somewhere there. If we get there, 23, 24 handle. I'm still waiting to see how the price is going to evolve. Gold, I had drawn this, probably something a little bit different, but it's consolidating. Look, this move from 2018 was very impulsive. It looks impulsive. We have a corrective move here. It's kind of drawn out sideways. It looks okay. It looks corrective. So I think eventually gold is going to be breaking higher as well. It's all about the dollar and equities, and we know that if equity starts dropping, then metals suffer. But look at the S&P. I mean, this move here is just 45 degrees, no more than that. It's just unsustainable. But do you go against this? Of course not. I'm not selling this. We have to see yields rising before stocks can go down. I've been saying this for weeks, right? And yields are not rising, so there's no point fading this. Yesterday, I was seeing all these people reading about people. Oh, yes, this is the start of a bear move. Look at the yields. No, it's not. And today, we have a reversal. Nasdaq is up. Okay, not as much as it lost yesterday, but it's still up almost 1%. It's a blip. So I'm not getting in the way of this. The DAX is exactly the same story. This ascending wedge, whatever you want to call it, it's just brutal to get in front of it. So I would never touch this, unfortunately. Oil has been very strong. We know that. Again, this big resistance zone here, which I had drawn weeks or months ago, we've just entered it now. And lo and behold, we just came right back down, and from $76, we're down to 73. It's going to be difficult for oil to go past that. I'm not saying it's impossible, but it's going to be difficult. And we need OPEC to basically not agree on anything, and then I think it can break higher. But as I said before, I think the dollar is, I think it may have some legs still. It might go a little bit higher. So it could continue, but I think it's going to be a selling opportunity. That's my view for that. Bitcoin, because people do still look at cryptos, is still within this flag, whatever you want to call it. It's getting drawn out a little bit more, but still, it was an impulsive move lower from 60 odd thousand, and it's just correcting. And I have to say, it looks weak. I don't see anything strong with it at the moment. It's trying to bounce, and the more time it's spending down here, I think the more probable it is it's going to break. And if it breaks, then we have the 26,000 mark, which is Michael Saylor's average. Everybody knows that. And Steve has said that so many times. When the market knows where the pressure point is, where pain is, it will always go for it. I saw this even when I was a market maker in London. There were people sitting next to me who had huge positions on certain derivatives. And as soon as the market got a whiff of it, they did everything they could just to press on it and to try to get you to stop out. And it usually works. So I think if we drop lower, we're getting towards 26,000. That's going to be defended heavily. But man, if that goes, I'm not kidding. I think it's somewhere between 10 and 15,000. That's, I think, the target. And that's where I am going to be looking to get long that. So I'm sitting patiently and waiting for that. I don't know what you guys think about cryptos, but I think it's, we did look at the bond. No, sorry. So that's my view. And last one, Euro pound. I've been talking about this for a while. I said this late last year, late December, when we got the deal done. I said I think the pound is going to be one of the currencies that's going to be doing well next year. I still think Euro pound in particular has the potential to test the zone 83, 84. I'm going to be looking for the first time in ages to get a long Euro pound there. I've been trading it on the short side for a while, and it's been pretty good to me, but I do think we're gonna get there, and that is then a big decision that we need to make.
Yeah, your 92 short call was a great one still.
Yeah, it was good. And, sometimes you get really lucky with the entry, sometimes not. I'm usually early. That's what my wife says as well. But yeah, this one was good. And that's pretty much what I have. I don't know if Steve is here to give us.
It's not the entry. It's whether you get out of the trade too fast.
Yeah, that's good too.
Quick draw Volkey's here. Oh, okay. Hey, buddy.
I've been here listening to his rant, being a quiet boy. Yes. It was great. It was a great review. I had nothing really to add. I mean, I agree with more or less everything Stelios said. Now, I think it's a common understanding that we all more or less agree here that the dollar's rebound seems to be corrective. At the same time, we seem to agree that this correction might have a little bit more to run. Now, tying that up with fundamentals, in my opinion, the end of this corrective rebound, which, by the way, since we're talking about the dollar having the ability to extend higher, I think that today's FOMC meetings might provide the catalyst for that, for another extension higher in the dollar. It is very likely. I mean, it has the potential of providing that kind of a catalyst. Now, I think that this extension higher in the dollar will probably die once the market realizes that the focus shouldn't really be that much on expectations of if the Fed is going to eventually move, because the Fed most likely is eventually going to move, but what the Fed is willing to do and how much is what the Fed is willing to do in comparison with what needs to be done. So I think that, and this is when the metals, the precious metals, are going to find, the monetary metals, even better if I may say so, about gold and silver, are going to find the bottom. So once the market realizes that even if and when the Fed moves, it's going to be too little too late. I think that's when the dollar is going to continue lower, probably with force. That's when the metals are going to explode higher, probably with force. And we're going to see the prior trend resume. My medium to long-term thesis about the dollar weakening hasn't changed at all, because fundamentally speaking, absolutely nothing has changed. Now, I see a lot of people commenting about the yields, the treasuries. Somebody else was asking, like, why do we have this move lower, etc. I've said it before. I've said it before on this webinar and on the next one, the Morning Edge we have for Forex Analytics members. You need to take everything that has to do with government bonds with a grain of salt, right? Somebody else wrote a comment just a minute ago that the equity move has been BS since 2009. Listen, all the froth and the bubbles that have been built upon one single construct, and that is the extreme overvaluation of fixed income and government bonds. And the reason why that is possible is because the main buyer has ended up being central banks themselves. Having said that, I do believe that there is some, this is not a completely fixed market, so it follows some direction, but the extent of the moves is extremely contained. So I still believe that treasuries are going to turn lower soon. I think they've had a corrective pullback, rebound. I was talking now about the yields. They've had a corrective pullback. Now, I do think that yields are going to move higher and treasuries are going to move lower. But, keep in mind that whatever you see is completely BS, right? I mean, get the central banks out of the equation, and trust me, the market is going to find a new equilibrium at completely different levels. But when I say completely, I mean completely different levels, right? So there's no question about it. Equities are going to remain well bid in general as long as inflation is high. It is. As long as we have so much printing of money, which we do. We've had like a 30% explosion in money supply in just a single year, right? Which is unprecedented. Never even came close to that.
Steve, do you have any kind of fundamental rationale, reason for why the Russell hasn't made a new high since last
Oh yeah,
March?
that's very easy to answer. We've been talking about, in general, most of the times there have been periods of overperformance, but if you go back in time, you'll see that the Russell has been most of the times underperforming S&P and the Nasdaq, and the answer is very, very simple. First of all,
Domestic stocks.
Yes. First of all, the Russell includes smaller companies which benefit a lot less from the mania cycles, right? I mean, very, very infrequently you see people piling up on these type of stocks. That's number one. Number two, the Russell is somewhat more grounded to reality because, as you said, these are real smaller companies that are involved with the domestic economy. So, they're more influenced by, the real, quote unquote, real condition of, the economy.
The U.S. economy.
Yeah, exactly.
Okay.
And that is why I think that in general, as long as we have this type of environment, people shouldn't expect the Russell to overperform the S&P and the Nasdaq over a long period of time, right? Shorter term, for example, we saw an overperformance of the Russell.
Yeah.
Yes, when we were, yeah, exactly. When we saw light in the tunnel having to do with COVID, right?
Mm-hmm.
So yeah, that was a catalyst to see a period of overperformance. But in general, as long as the environment is what it is, FOMO is going to be FOMO and the seeking of some kind of return is going to be pushing people in what's called growth stocks, right?
Yeah. Okay, that was a great explanation. Thank you very much. Do you see, so you take no market message out of it that, the Dow hasn't made a new high. I think it can today, but no market message out of Russell stalling out for 4 months.
Not really.
For the other ones.
I still see this as a bullish consolidation until proven otherwise. I do think that at some point, probably during the summer, we're going to see a sharp leg lower in equities because these markets only have this type of corrective moves, right? They grind higher for like months and months, and then something happens and the market flushes out the people that chased at the wrong point in time, and then after a few days of a volatile move lower, the market volatility dies again and the slow grind resumes. So at some point we're going to get that within the summer. I'm pretty confident about that, but I don't think it's going to be long-lived. And as I said, we have all the ingredients needed for equities in general, with exception of small periods of time, to keep on grinding higher. I don't think that the Fed is going to do anything to interrupt that. And at the same time, as we've said before, inflation favors financial assets. With the exception of, getting what we call hyperinflation, because hyperinflation is a, totally different story. But high inflation within the context of, let's say, tolerable, is good for equities.
Okay. Well, I appreciate that answer. A lot of insight, and now we could get some additional wisdom from our guest today, Harold Malgrim. Harold, welcome back to FACE. Always look forward to talking to you. I've asked you to unmute. I'll share my screen.
Yeah, I've got you on mute.
Okay, there you go. Hi, Harold.
Good to talk to you.
Yeah, good to talk to you. So, there's so much going on since you and I last talked. And, one of my major takeaways was if the Biden administration was to get anything through Congress, which seems to have hit some type of brick wall, they had until August, because then we're into the election cycle, or they had till the end of July because Congress goes on recess. What kind of grade would you give the first 6 months or so of the Biden administration? What are they doing well, and where are they misstepping?
That's a big question, but it's really important. I listened to the last half hour of your
Our analysis
discussion. Yeah.
Yeah.
And I thought, you're missing one thing, and that is the political background and how it will shape stimulus in the U.S., but also how it will shape the Fed policy. So let me just answer your question, but let me first say Powell's term runs out at the end of this year, early next year. And normally, if he's staying or there is a successor, it would be decided roughly November. So if I'm sitting there as Powell and I want to stay, in no way am I going to taper or do anything contractionary. If I do it, the odds are it's going to cause turmoil, and I'm out. So
okay. So he has an axe to grind. Do you think he wants to stay on? And do you think Biden will renominate him again? Keep him on?
Wall Street loves him. I think Yellen wants to replace him. That's my insider's assessment. After I'm still around in the background.
Okay, because he's been playing ball with Yellen. I mean, they they have a relationship, so that surprises me a little bit, but
Well, it's
you-
just my judgment. She would like somebody who's more.
like Arthur Burns?
I think she's thinking of someone who would be a kind of sister. You know,
Would be a what?
a sister. You know, someone who will work with her within the
Oh.
family.
Okay,
So just that's the main background. Now, how has the Biden administration fared? You
do you
know,
have
there's
any people in mind that you might pick, Harold? Do you want to put a name out there or no?
Yeah, well, the vice chairman, what's her name? I'm sorry, I'm tip of my tongue.
I forgot her name too.
Yeah, but she's
All right.
forgettable, except that she's a favorite of Yellen.
Okay. All right. I mean, that's an interesting headline anyway, that that Yellen may want to replace Powell.
Yeah.
Okay. Okay. So
Now,
now we're talking about Biden.
yeah. Now, your this point is correct that they had to get something done before September, which meant really have to get it done in July, where we are now, because August Congress goes away and they don't come back till they don't really work until second week of September. And by then, it's not much time before the Christmas holidays. So the working time is really slim. And now they're tied up in knots over infrastructure right now, but they can't seem to get votes for anything else. So let me explain. Number one, they have a tax bill, but I believe that it's impossible to get any change at all in tax law until sometime next year, but probably not even then.
Okay.
So don't expect any big change in the climate for your investments. I just don't see the votes.
Okay.
Now,
Yeah, they
stimulus,
could barely keep their own caucus together.
that's right. They will divide.
With Manson, he's he's kind of like the fly in the ointment for the Democrats to have a majority, right?
Well, I think what he's doing is he's trying to help Biden by sidelining the progressives. He's trying to say, the progressives can't pass anything therefore won't pass. So let me just put a marker down here. Stay inside and forget the progressives. So it helps Biden somewhat, even though it looks like it's trouble for him. Typical Senate maneuver of old Senate hands. Now, regarding an additional stimulus, I'd say the odds are zero. Anytime, it's just not going to happen unless.
Okay, so that's his second. Isn't that what he wanted to? The Democratic Party wanted to run parallel with the compromise infrastructure bill that really is about roads and bridges, etc. And the other part is human infrastructure. Is that what you're calling stimulus?
Yeah, the human part, whether it's assistance to working mothers so they can go back to work, all that stuff, it's not going to pass.
I thought they already passed something where they're going to get childcare, $300 per child. That has not passed.
No, that passed in the previous stimulus. That's in motion, but that's about it. But we're not going to get anything new. So I know this sounds bleak, but here's what I think you keep a point focus. There is discussion in both parties. Is there any way the voting outlook can change? And the answer is yes. If there is a major negative correction in the stock market, that will scare a lot of Republicans into working with the Biden team. So in the background, unhappily, there is a lot of talk. Is there a way to engineer a downward correction in the stock market sometime between now and the end of the year, because that is the only way we're going to get votes for any expansion.
Well, what do
Um,
you think? I mean, look how effective, at least for a day, just jawboning, Powell's jawboning about, yes, eventually we're going to taper. It took about $100 out of gold and silver,
right?
and the
Yep.
S&P sold off pretty good. Although then he came back out and softened his speech a little bit, and we have the Fed minutes today. Could
Right.
The Fed minutes be part of it? It should be easy to engineer. The market would not like a taper. It definitely
Uh,
would not like higher rates.
Okay.
But just a
Well,
taper could do it, right?
well, here's what I see. Will Powell cooperate with Yellen and let let a negative correction bloom, or will he, be cautious?
Yeah.
The Treasury is probably going to somewhere along in here paint a bleak picture. Now, how is the economy faring as we talk? As I watched your comments about the 10-year yield, and you put, as I do, a further downward move to about 120, and I thought, yeah, that's about right. I think we have more to go downward on the 10s and 30s.
Okay, we're at
And
131 now. It's actually coming off again today. So
yeah,
we're
it's
10 bips away, 10 bips away from where my
yeah,
target.
yeah.
Yeah.
I mean, this is frankly my assessment of the last week or two, that we were now on the edge. And now we look at the economy, um, we have mixed signals, it's true. But the reality is the housing boom appears to be over. Not that it's peaking, but it did peak. And the high end is showing pain. The high end home builders say that the market's drying up. The lumber index is falling rapidly. Um, it's I think the when we look at ISM and PMI, we see good numbers, except that the numbers for employment and capital spending are terrible. Um, I think the economy is now turning. What we're seeing is demand is not sufficient without more stimulus, and we're going to slow down markedly in the second half. Now, all of that is background to what we think about um, how this political turmoil will be resolved. Now, is the Biden team really good at this or not? I have to give them a C plus, um, because
Okay.
they're tangled up with a bunch of progressives who want to do something that can't be done. They simply can't get the votes, but they keep dividing among themselves. And Biden knows how to do this. He has experience, but he can't control the party. And Nancy Pelosi in the House, she's trying to keep her power, but that means she has to take care of the progressives. So it's not getting anywhere. They're caught in a mire. Um, so all of this is backdrop now. Um, so when you start looking at currencies and commodities, well, I don't want to touch on commodities. You have the best possible person tomorrow. Um,
Oh,
uh,
we already had Tracy yesterday.
but yeah. Oh, I
Yeah.
see. I didn't see. I thought you
All
had
right.
it
Well,
tonight.
yeah. So it's on video if you want to watch it. But
Oh, I
she was
will
here
do.
yesterday.
But she's great. So everybody
Yeah.
should watch. She's about as good as it gets. Um, and so so the backdrop is um, the economy is, in my judgment, sagging, and then we're at this questionable period of, are we going to have an engineered negative correction, or are we going to stay where we are? I don't think we can stay where we are, as the weakness shows. So then, how is it controlled? Does Powell want to stay? He'll cooperate in whatever is necessary. Um, but I don't think we should expect any sign of tightening or hinting or tapering. Um, it's just not the right moment unless Yellen says, explicitly, if she's not going to say if you want to stay, but basically it'll be that message. This is what I want.
So could they do that by coming out with these kind of jawbone statements about stock prices are
Elevated.
irrational, exuberance, or frothy, and
somewhere in there, I would not be surprised.
okay,
yeah.
All right, and I don't know what you're thinking, Harold, but I know you have a bottoming target around 120. But when I look at yields here, to me, what the yield's coming down from over 170 towards 120 is just a correction from the yield move from 50 bips to 170. And to me, this is just correcting this first big advance that we had in yields. And there's another wave after this decline to the upside above 2%. So, and you know what? The Fed didn't tighten, and look what still happened. So what was this? Who drove rates from here to here if it wasn't the Fed? Bond vigilantes?
Yeah. Well, this is all about the blame game. Who's going to get blamed?
Okay.
And the Fed wants to resist blame. So that's probably the driving force at the moment. They don't want to be blamed for anything that even slightly favors a big change in the board.
Because they're already unpopular.
Yeah. Popular in Wall Street, not popular in the Treasury.
Okay. All right. So Yellen really pulling the strings for what's going to happen in the Fed, and that's when, in the fall, November, you said again?
Yeah.
Harold? November. Yeah. All right. Can we switch gears? I know you have a lot of experience on the defense side of things. Okay. Yes. So I want to ask you, Biden had his big summit with Putin, and less than 3 weeks later, there's another big hack. I don't know if Biden gave him a wink and a nod that it's okay to hack the Republicans since you hacked us already. But, it seems like there's going to have to be some type of retaliation. And I've read that we're just not really strong enough in this area that if we retaliate, that then the next action we may not be able to handle. What do you think Biden will do or won't do when it comes to Russia right now?
Yeah, his foreign policy team is capable, but not at the level of experience that I think they ought to be. I mean, they should not have met with Putin in the first place. So because it opened,
gave him legitimacy.
It gave him legitimacy, and then they favored him with this dropping the Nord Stream 2 sanction, which gave him more legitimacy. But they didn't get much back. Now,
no, this is what they got back, and this was not the the criminal syndicate. This was the military service going.
Yeah, the GRU, their military squad.
Right.
Right. I think. Well, I've been asked by a lot of different people, how would you get back? And I said, you don't do it in the same way. What you do is target Putin's personal power base. He basically is supported by a dozen or two oligarchs, and he gets money out of the flow of all their businesses.
Mainly oil.
Not only oil and gas. I mean, every major company in Russia is subservient to Putin and his own bank. And you can go after the bank accounts a lot of the oligarchs, for example, have money outside Russia. I mean, it's long tradition of making money under the Soviet Union and putting a large part of it outside where it was unreachable.
Are they
Uh,
using Cyprus like they did? I mean, they got
yes,
banged
yes.
pretty good moving in Cyprus when they had that bail-in.
Yeah, that still works. Cyprus is still a major flow. It's
Okay.
been a long time. I'm very familiar with Cyprus. It's decades long. Um, and that flow is directed by Alpha Bank. Deutsche
Mhm.
Bank is very much involved with that Cyprus Bank channel. The Russian money flows through places where we can see it, and so you're going to get at Putin. You have to get at his power structure because if you nail his supporters, they have pressure capability on Putin. But
Yeah.
if you try to do it,
Instead of like I heard someone say that they were considering turning out the lights in Russia, and that's not going to build any popular sentiment for the
yeah,
US with the whole population if we take down their grid.
yeah,
Um,
that's no, yeah. You don't want to make the people unhappy. Yes,
right. So
then the Russians.
just take away his financial power.
That's right.
Okay.
That, that,
And with China, you see any developments with what do you think about the way that um, Biden's interacting with China? I heard that the administration said that Taiwan is no longer a problem or a complication for the US. It's an opportunity. What do they mean by that?
yeah, they don't know what they mean. They are playing this day to day because China is upset increasingly um, by talk of among Australia, Japan, and the U.S. talk of defending Taiwan, and then the Japanese came out and said, "Well, we'll participate in the defense of Taiwan." So everything is heightened tension, um, and I don't know if I really agree with how they're handling this. They're trying to use soft words mixed with hard words, and it's very confusing. I think it's day to day. But if you boil this down, China is not in a position to have a full scale war with Taiwan without losing a lot of lives of the military. And you remember that when Russia was in this battle in Chechnya, it finally came to an end because so many Russian soldiers were killed that the mothers of Russia, basically turned on central government, said that's it, no more. I think China even more so. It's a culture built around families, and most of these families, if they have a son, that's their only child. They're not going to
That's
want
right.
the boys to be killed.
Right.
So they're not going to go into kinetic warfare. They may try to harass Taiwan, but um, but the damage to the regime if they actually went to war and lost a generation or two of young men, I think Xi Jinping would not survive that.
Okay. All right.
So
All
yeah,
right. Because uh, what's happening in China with their currency is that China has done a few things. They're trying to push commodity prices down,
yes,
and they want the yuan to depreciate in value. That it's been a little bit too much. What do you think China does when it comes to currency? They're talking about going with a digital yuan. Is this Cold War really just an economic Cold War between us and China?
for now, yes, but it's a really hard war because Xi Jinping is really upset about what he calls the American blocking of China's technology progress.
I
and
see.
making
Is that why they did the, I mean, there's all kinds of things happening to Chinese stocks, and there was
Yeah.
one that was cut in half, and they're really going after their big corporations that are domestic companies or Chinese companies. Why are they
Yes.
doing that?
Basically, number one, the Chinese economy is not growing as fast as it looks. They measure their growth by output, but demand is really, really weak. And if we look at consumption at the ordinary working folk level, it's extremely weak because there's been no rise in incomes from the majority of people for the last several years. They have to find some way of shaking up the internal economy, but they haven't quite found a way to do it yet. But we should. They are not. They're growing really at about 2% rate, not 6, 7, 8%. But it's just we are mesmerized by these output numbers. So they're in a crisis internally, and I think Xi Jinping is struggling to maintain power because his power, to some extent, depends not only on the party apparatus, but on the wealthiest Chinese families. Um, we overlook this, but they have their oligarchs also. The concentration of the economy in China is like Russia, is increasingly like the U.S., highly concentrated enterprises dominating everything. And so the leadership is struggling with this inequality, slow growth, unhappiness, and then food. Food is a nightmare because
Oh, yeah. Yeah, it could be a nightmare here, Harold. If you look at grain prices, they've yeah. Go
I
ahead.
expect a nightmare here too. I think the inflation that we're having is going to die down, except for food. But food is going to be a nightmare going ahead.
And water.
We really have to. Biden people are not thinking about these things. They keep talking about green economy, but they're not focused on the reality. We have a water problem that's fast developing on the western side of the U.S.
Yeah.
That was foreseeable. But we have a big water problem in the central U.S. where the water table is slowly. Drought is coming unless we rethink how we distribute water. And I don't see anyone in the administration thinking ahead. I've been thinking about this some years about how to move water from the Arctic through Canada to the U.S. because there's a lot of water if we just move it.
Yeah, it's melting anyway.
Yeah. So.
All right. Yeah. Well, why don't you call Joe today so that we have some water to drink here in California and Arizona and the whole West, and how about not using corn for ethanol anymore instead of feed people with the corn instead of making fuel out of it. That's the most.
Well, I'm with you, but I don't see anyone around Biden who has that kind of mind that you have. Or thinks
maybe I should run.
Why not?
Okay. I have too many skeletons in my closet.
Yeah, I've been around this for too long. And by the way, this brings me to a point you didn't mention, but that's about all this Bitcoin controversy. We have a minute. I have never taken sides on whether cryptocurrency is a good thing or a bad thing. I've simply been observing how central banks and governments look at it. And predictably, they are getting increasingly intolerant. And not just nervous. I think they're now at the point, how do we get a grip on it, control it, or just stamp it out? It varies among. So we're going to see increasing effort by all governments, with the U.S. Right in front, of making it extremely expensive, making it extremely taxable, more taxable than it should be, and eventually making it impossible to function in a market sense. I just don't think that cryptocurrencies have much future because they weren't allowed to be.
Right.
The-
So the rest of the world's going to go the way of China banning it.
yeah, but China's doing it slowly because they can't quite, China is an economy where there's a lot visible, but a lot happens that's not visible. So their problem of putting everything under a digital system, it would be much harder than it is in the U.S.
Okay, well, I tell you what, Harold, it's always eye-opening, and to get some thoughts about what's happening in our Meshuggah world that we have going on here today. If you need a translation, let me know. It means crazy in Yiddish, but really appreciate your time and you spending it with us. And really some interesting things were brought up about possibly engineering stock market decline that would get the Republicans on board, because I remember TARP when it was voted
Yep.
down and then the market tanked. And yeah, there's nothing like people's 401ks melting to get senators and congressmen into action. So thank you very much, Harold, for showing up
Okay.
and being with us again today. And I look forward to our next conversation.
Good. Me too.
All right,
I hope
buddy.
it'll be better times.
All right. Everyone, everyone, Harold Malgrim, and you could go to his website and read about him and their research. And if you like what Harold had to say, and there's, a very interesting and experience and wisdom comes with time. It only comes with the passing of time. And Harold's got an abundance of it. So thanks again, Harold, for being with us today. Adios.
Adios.
Adios, my friend. See you guys tomorrow. Remember, don't just count your pips, count your blessings, and see you tomorrow.